Gautam Dugar is with us. He's Head of Research and Institutional Equities at Motilal Oswal Financial Services. Gautam, good morning. Great to have you with us here. So the market, of course, when it sells off like it did on the back of global cues, is indiscriminate. Everything goes down. But then you start to emerge a little bit after the storm has passed and you find opportunities, right? Which could be meaningful because stocks sell off aggressively. So let me start by asking you, are you, maybe in a more tactical kind of a way, are there those kind of opportunities in your coverage universe where you think stocks got sold unnecessarily?
Good morning, Prashant. Thanks for having me. Prashant, I don't know if sold off is the right word to use because we are hardly down 600 points on Nifty, right? I think last week at the peak you were 25,000. Now I think we are at somewhere about 24,300 or 400, that range. So less than 3-4% correction. Actually, it's not even a correction. If you look at the mid cap and small cap indices also, they are down hardly 3 to 4%. The rest of the world markets have gone to levels where they were 1 year back. We haven't even traced back to 1 month old levels, right? The trailing 12-month mid cap and small cap indices are still up 50% each, more than 50 actually. And Nifty on a trailing 12-month basis is still up more than 24%. So we haven't actually seen any correction whatsoever yet. We I think discussed defense names, railway names last time when we interacted. Defense market cap, which has gone up from 1 lakh to 11 lakh crore in 3 years, has hardly fallen 10%. So we've not seen any correction, Prashant. And despite having a very muted result season, the market has been very charitable with most of the stocks, right? So this was expected to be a weak result season. It is a weak result season, but market has taken it in its own stride. So yeah, I mean, we have to see a lot more if there is any correction left.
Okay, well, for now, the market is definitely bouncing back. And it just goes to show that this has been an out-and-out buy on dips market, right, Gautam? I mean, every problem thrown at it, the market has sort of come out strong. So tell me, what do you do now in terms of the result season is almost behind us? What has been the biggest takeaway for you this result season? Anything that interests you where there is perhaps still a little more valuation and growth headroom?
So, Sonia, yes, there is a growth headroom. Valuation, I suspect there is not much valuation headroom left. Your mid-cap Nifty is trading at 33p, which is at a 60% premium to Nifty. I have not seen such levels of premium in the past. A small cap is at a 40% premium to Nifty. It usually trades at a 20% discount. So absolutely no headroom for mid and small cap indices. Nifty is the only index which is behaving relatively more reasonably, I would say. It is at about 20.5 times on a rolling forward 1 year basis. As far as result season is concerned, we have seen very flattish numbers for the 45 companies which Nifty, where we have seen numbers come through so far. Earnings growth is 4% versus expectation of 2%. And for our broader coverage universe, where 200 plus companies have reported, earnings are down about 1%. We were expecting 2% decline. So absolutely in line. Largely an impact of OMCs. Ex of OMC growth is 10%. Which is also in line with expectations. So it's been a mixed bag actually insofar as sectors are concerned. We've seen decent performance coming in once again from auto, which is beaten expectations. Capital goods is in line at about 20% growth. Pharma has been a standout performer for this earnings season. Earnings growth is 26% for our coverage universe, where 15 companies have reported so far. And metals have actually beaten expectations because of some solid outperformance from Coal India and Hindalco. On the downside, you had cement, you had spec chem, you had retail, you had oil and gas, which have disappointed and missed expectation. And then there are biggies like financials and tech, where earnings have been in line. So net, we have seen about 1% of a cut for our FY25 and 26 estimates. We are now at 1120 and 1320 as far as EPS is concerned. So muted result season, unexpectedly so. From here, you will see earnings pick up a little bit. And we should end the year, full year, at about 13-14% growth. And so far as sectors are concerned, we had recently upgraded tech and pharma. So there we remain quite constructive. Consumer staples, we had a hope that there will be something coming in budget, which has not come. But monsoon has been good. So maybe given the big underperformance that this space has seen over the last 3-4 years, at least relative risk reward is favorable on consumption side. And financials, while will continue to look relatively cheaper vis-a-vis other sectors, but stocks don't move because there is an overhang of deposit growth now. And best of the earnings, as far as financial is concerned, They've had a rocking 5 years from FY19 to FY24. Now growth is very healthy but moderating, and there are other headwinds emerging. Some of the NBFCs we have seen asset quality stress emerging. So yeah, I mean it's very little to choose within the relative context, and it will be good if market were to consolidate and time correct for some time and digest the gains that we've had over the last 12, 18 months.
Sure. Gautam, just one follow-up, since we're talking about earnings, right? I wanted your thoughts on autos, because there's such a divergence over there. Some companies like Bharat Forge are de-risking and now, focusing more on the non-auto space, whether it's defense, whether it's aerospace. Clearly, there is a slowdown in the auto sector right now. So what do you do here? If you own auto stocks, do you sort of churn out? What's the best way to approach it?
Yeah, so absolutely. See, we have downgraded auto from overweight to underweight when we did our model portfolio revision at the time of preview about a month back. You have to look at the context for auto between FY21 to FY24, which is a 3-year period. Auto earnings have tripled from 18,000 to 62,000 crores. And I'm only talking about the Nifty auto stocks where there are 6 companies. Now, FY25 and FY26, we are expecting a very tepid 10-12% kind of a growth in auto. So as far as this quarter is concerned, clearly they have outperformed expectations because of the big outperformance of Maruti and some of the other heavyweights. But incrementally, the growth is going to look much more moderate than what one has gotten used to over the last 3 years, which is one of the reasons why we downgraded. As far as our choice is concerned, we prefer M&M still. We have had no Maruti, no model portfolio for the last 3 years now, and we are comfortable holding M&M because tractor is also expected to revive now, given that we've had a good monsoon, plus their SUVs continue to do well, and valuations are still very reasonable in the context of overall market. And then in the two-wheeler, we think Hero can be a tactical bet around monsoon. Very little to choose, actually, Sonia. We got lucky. We had added Motherson Samvardhana, I think, in April. By July, the stock was of 75%. So we removed it, given that such a large cap stock has had such an outstanding performance in 3 months. So auto incrementally, you would see a lot more consolidation happening because the base is getting very high now, and FY24, both on volumes and margins. So volume growth will also taper off, and margins will also look very range bound now.
I got that. So with auto, let me sort of push that point ahead. With Ola Electric listing today, Gautam, I'm not asking you to tell us whether buy, sell. No, I'm just saying, how do you think about this? Pure play EV electric company, market cap would be about $4 billion. I mean, at least what they sold the issue at. How do you think about this one?
No, it's going to be an interesting listing and very interesting choice for investors in the auto sector. See what is going to happen in auto over a period of time now in the next 2-3 years. You will see divergence of choices emerging. You have Ola now, at some point of time, Hyundai will come. So auto sector, which has not seen much of a listing action on the big names, you are seeing that happening after a long period of time. We had seen similar action happening in financials 3-4 years back when insurance and AMC companies started listing. Similarly, in consumption, you've seen an emergence of variety of categories over the last 5 years. So it offers an interesting choice. One has to be very patient with such kind of names because they're right now not profitable. Plus, there are some headwinds also emerging on the EV volumes. You've seen in the last 2 months, EV volumes tapering off. The support of subsidies slightly tapering away. So in that context, one has to see how the volume trajectory and penetration of overall electric vehicles emerge in India in the next 2-3 years. While the trajectory could be very strong over a period of time in the next 3 to 5 years, but near term 3-6 months, one will have to see how consumers adjust to the absence of subsidy. But yes, from a stock market point of view, it's a very interesting listing and it offers a wide variety of choices for investors to choose from in an overall very solid sector.
You've explained a lot about the business, but you've not said whether one should buy it or not. So post-listing, I mean, should one buy? Should one wait for profitability or signs of, profitability? What should one do?
Won't be able to comment, Sonia. We don't have a coverage and it's neither part of our model portfolio.
Okay, I understand. All right. Just before we let you go then, any thoughts on, you said that you're getting into the pharma space in a big way. And as we speak, a lot of pharma stocks are actually sitting at fresh highs. Ipca Labs is at a fresh high. Zydus Life, Lupin has done very well, up 2.5%. Ajanta Pharma is at a fresh high. Eris Life Sciences as well. So if someone's missed out on the rally here, Is there still more to go? And do you stick to the large caps or do you look at the non-index large caps in pharma?
So pharma, obviously, there is still more to go in my view because the earnings are looking very solid. You've had a very good FY24. You're looking at a strong FY25 as well. And within pharma also, you have a variety of choices. You know, you have US generics, you have domestics, you have healthcare in the form of hospitals and all. So we like both hospitals and US generics, and also some of the India-focused plays like Mankind. So we hold Mankind in our model portfolio. We like Sun Pharma. We like Max and Medanta, both in the hospital space. I think this sector is going to see good outperformance in the quarters to come. Because it's one of the few sectors where if you look at the 8 quarters of earning trajectory, it's been very stable and very healthy. Very few sectors in India right now are offering that kind of consistency on earnings growth, not even consumer. So yeah, I mean, healthcare, I'll be very, very excited to continue to hold.
Gautam, you're talking about Max Health Pharma or...
Hospitals, yeah.
Hospitals. No, so I have you look. Do you have coverage on Aster DM? I mean, there is this deal brewing. Okay, you don't have coverage with the Care Hospital. So it'll be the number 2 or the number 3 largest hospital player after this transaction goes through. But anyway, for another time.
Prashant, broad point on hospitals is that given the way some of the hospital investments are happening, you're hearing news about Bajaj Group stepping into the hospital space. A lot of private equity players have been very active on the deal side on hospitals, both on the organic and inorganic side. So clearly, the consumption for branded healthcare services post-COVID has gone up, and which is what you're seeing in numbers. There has been a lot of hospitals, companies which have got listed in the last 2.5 years, and suddenly become very important and relevant piece within the overall healthcare allocation that if you look at 4-5 years back, the entire discussion around healthcare will stop at Sun, Reddy, Lupin, and Cipla. Today, you have about 30-35 companies which are investable.
Right, Gautam, thanks a lot for joining in. Wishing you a good day ahead, a good Friday. Already looking quite relaxed, set for the weekend, looks like. Appreciate you joining in and giving us your view on the whole host of sectors as well as on the earnings that went by.